Hello dear traders, petar.jacimovic here. I want to post the update on the gold in your Japanese yen. What I found so far. Also, just say that I didn't post for a month, 1 month, because I'm very busy with my work. I'm working also, um, on the stock market and so on. So I don't have so much time to post videos, but I always want to um, post if there is some anything good, and also to explain also some concepts that you can also use in your trading. And the point here on the forex is basically the forex is not centralized market. There is no central exchange for this market. It's over the counter market, and you must if you want to be successful in the forex, basically you must use some tested models. So remember these words: tested models. You need to test or to find the proven models. So um, not techniques like I don't know. You need to know exact rules of your model, and that need to be tested for good time, good period, and you can rely on that. So one of the models is basically it came from Douglas Taylor. Basically, he traded years and years ago, and he said that there is a cycle that every, for example, after every 2 or 3 days there is a 1 day correction, and you know on the market. So, and also Linda Rashke spoke about this concept using the also rate of change 2 period, which is this here. It's a rate of change oscillator. Using the simple moving average. You can also use a 2021 simple moving average or exponential, like some it's shorter term trend. And also trying to find the patterns and the models you can basically use. So it's not about fancy indicators and stuff like that, as like I spoke in my previous videos. It's about to find a model which is working for you, especially on the forex when we don't have a volume. It's like when I trade a stock, I know exactly the volume because it's centralized exchange, and the volume there is most important thing in the technical analysis. Here there is no volume. There is a tick volume and stuff like that, but that is not actually size traded. So you need to use the models, and you need to test your models. You can also design your own models. It's important that you actually tested that, and that have some success. It can be a 60-70% win ratio, but then you focus on that and trade that model. You can also combine few models and trade when you see the opportunity. For example, one model here is the goal position. I also posted for InstaForex here. This update. So there is a 3 days of sideways. As you see, the price basically this bar here was trading inside of this range of this day, and then this bar actually tried to go above but failed at that moment to go, and this is a 3 days sideways. So this is a sideways range, and it can create something good. Now we watch, will price continue to go lower, or the price can actually go and break the high of that trading range. Basically here there is a hidden bullish divergence. If you check this bar, 1, 2, 3, 4, 5 days. So these are 5 days. Price went lower, and you see the rate of change here. Oscillator went created a higher low. On the oscillator there is a divergence combined with the breakout of this 3-day sideways range. It gives us a good clue, and this is a model that you can actually buy here and probably hold for 2 to 3 days after the breakout. So hold for the next 1 or 2 days and watch how it will develop. Okay, you can have your targets and stuff like that, but you need to watch here and see how this will develop. So this position was based on the breaking of the 3-day sideways trading range, and also hidden bullish divergence in the background. Okay, so that was a position on the gold using the sideways breakout. So this is a volatility based model, breaking of the volatility when the volatility actually when we saw the sideways movement and some form of accumulation, mini accumulation, 3 days, then you watch for a breakout, and there you also find bullish divergence in the background. So that's about the gold. Gold may go 1,240, 1,245, stuff like that, even maybe higher, depend what will happen on the news and stuff. So, and the next opportunity I want to show you is a buy day. This is according to the Taylor method. 2 days, high to low, and then the third day is potential buy day. It's not always like that, but what happened in here is actually price did some tried to go lower on the open of overnight session and then went back. So it's failed to basically break the low. It's failed to break the low. There is a flip on the 2 period point rate of change. Pardon. There is a flip for upside, and again 2 days, previous 2 days, high to low. Third day is a buy day, according to also Douglas. According to the Taylor method, price also traded below, close below 5 simple moving average here, and right now target should be above the 5 simple moving average. So it can be at this where the supply came, 130.96 or 140.30. Okay, so it's still in the bullish trend, even if you check this. This is a 20 simple moving average, so we're trading above that. So short term is a bullish trend, but anyway, there is a model that 2 days in a row, high to low, and then third day is a bullish day. Also, we need to take care of this and to see how the price will behave near this low. We'll see the fake breakout of the low, or price will test and drive, or price will just open and drive, like we see here. Price open it here and then drive higher. So this will be the low to high day. Now we want to see how much this can go. I expect the price to go above 5 simple average, which will be around 100, let's say around the whole 114 level, but we'll see. So this can be we have plenty of time till end of today. So this is also one model which is tested by Taylor and traded on not on the forex basically, but it's work on every, because that's on every market, because that's a cycle basically. It's a natural cycle. Nothing can go upward without any correction, and nothing can go downward without any bullish correction, and that's the key thing basically. So that's basically the key. For example, look at this. You have this 1 day correction. So in a strong upward trend, you will not see even the 2 days correction. I mean the 2 days high to low. You saw only one high to low day, and then there is a flip here. Price failed to actually go below here, and this was a classic rejection from 5 simple moving average, and also failed to break the low of previous day, and that was a good buying opportunity here. This is just the model which is triggered according to this one. So basically on the forex, you just need to I just explained the different models which are used by professional traders who with trading for many years also in the forex market. So they don't use basically millions of indicators and stuffs like that, and they use the models, the tested models. Model is basically um, everything. For example, let's say that there is a one model that every close in a downward trend above the 5-day simple moving average is will actually trigger the sell. That's explained also by Linda Rashke, as a professional trade. For example, there is a 5 simple moving day average. The close above will it trigger the sell with the target just below simple moving average. So for example, this is another close above, sell here, target below this 5 simple moving average. Close above, sell with a target below 5 simple moving average the next day. Okay, so this is also one of the models. So but basically you trade, you can use different models and use them when you see them on the chart, and try to be consistent in that in trading your own models. You can also use the already existing models, or you can decide your model, but you need to test that model and see how that will progress. For example, so this is the model. This buying opportunity was a model when we got a 2 days high to low, and third day was like a textbook open in here and open and drive type of the day, and open it just below the Friday's low, and then back to the Friday's range, which is a sign basically that sellers are exhausted here and that buyers are actually stepping in and they saw opportunity. As I said, after 2 days high to low, we got upward. We got a buy day also by the Taylor method. There's a 20-day upward in the background. We're trading just below the 5 simple moving average. I expect the price to go above there, and that will be some good area to close your targets. Or you can secure. I have some position from 130 basically, so I'm about 20 pips in the plus, but I will see how the day will finish, and then define will I actually add for one extra day and see how it will develop, or I can actually take some profit. Yeah, what I want to say here, for example, this is another, remember the goal I spoke about. Gold is a nice buying opportunity, was nice buying opportunity because bullish divergence and this 3-day trading range. But watch this, in the background you can also find same thing when the volatility actually decreased and price don't have power to go above. Even watch the trend. Watch this. This is a buying opportunity. You hold for a few days, 2 to 3 days. You buy here and you see this 113 pips on the table, right? If you held even more, if you wanted to hold for more, this was a nice 200 pips upward movement. Okay, so basically these are different models I showed you. Basically the Linda Rushke spoke about these models on the webinars and stuff, but you can also again develop your own models. It's not about any holy grail indicator stuff like that. You can base your model only on the 1 moving average, on the 5 simple moving average, and define the models you want to trade. But that model need to be tested by, you need to test that, to back test and see what win ratio you will have using your models, and then just you apply that model to your trading. And that's basically that. So these are 2 different models here which we use on the US Japanese yen. That's the one model is that we got the 2 days high to low, and the third day is a buy day, and it looks like it open and drive day. There is a flip in the rate of change, so that is also very good. And that different model was here where we actually traded we got a mini trading 3 days trading range, and the price started the breakout Friday, and then today we continue because we open and drive again. It looks very bullish today, and I expect new highs. I mean, higher price here, and to develop. Okay, so 2 different models, and basically. Um, I just want to share this with you, and hope this will help you in your trading. Um, Again, about these models, I speak about my mentorship program. If you're interested, but this is only for professional, for traders who wants to become professional or they're already professional. Um, there is a 1 month trading the mentorship program where I teach you the different models, and then you can use these models in your trading whenever you find them on the chart. Doesn't matter the currency pair you watch. You just need to stick with your models and trade them when you see opportunity. Um, and I also have the intraday models to trade the intraday, and I also have models to trade the daily bars basically, and position yourself after the close of position yourself on the close um, of the day, and see if there's any opportunity to trade. So hope you enjoyed. I wish you good trading, and have a nice day.